breakout in Google, I will not take this breakout trade because the macroeconomic environment is not there. So Google does not have broader market support. So, and then yesterday it just came right back. So today it's holding. Now it does have a bias that's updrift is up sideways kind of like that. So not bad. I would like to see a retest. I would like to see a buy coming in, but we'll see. My original plan was for to break clean, pull back, and buy the pullback. That would be a more prudent play. But right now already it's sitting in the pullback. A little sooner than expected. So it might be doing one of these. Not as dramatic, but pull back and then stay, for a while before clean breakout will take place. This is why I don't top the breakout trade 2 days ago because the broader market does not support it. The global economic environment, the macro environment does not support it. You can see clearly on the QQQ is still on a down slope, although looking at the MACD is the histogram is turning green already and the crossover taking place, but it's still on the lower level below the zero line, so it is still in kind of a bear territory. On the QQQ, so the border market is not there. If the border market breaks, then Google would have broke nice and it will have continued to hold up, but it doesn't. It's fighting at this level. Now the triple Q is stronger of the three major indexes. Wow, you see the spider. We will try to draw this line, and you will see it's still far off. Even making attempt of a triple top, it's still far right off. So this is weaker or less bullish than QQQ, and the diamond, which is a DJIA tradable, is even it dipped below this red line, 200 bars or 200 days moving average, and now it's coming back and fighting at this level. So you have all the border market indexes, right? One of this is right still fighting in and out or inside the bear territory. Spider, I have not even try to attempt to close this gap. Well, QQQ is right at the triple top. Everything is still pointing slightly in the bear direction on the border market indexes. This is why it cannot break cleanly yet. So let's look at Apple a little. And, yeah, you can see Apple is doing a triple top too. On a downward slope. Let's get this. Yeah, right there you go. So you have this. We clear triple top on Apple also. Meta. Meta also did the same thing. It broke a little and came back. That's what it's doing in a sense. Ideally is I want them to kind of hover at this level now, at the breakout level. And I want them to try to push it back down. I want them to give me a false hammer like these. These are false hammer. These are false hammer. I want a third one. The third one up here, around here, then they give me conviction to actually open the trade. On some of these, the Magnificent Seven. And then the video. Video is just sideways in that sense. Yeah. The video is actually, yeah. So that's about that this morning. I mean, news-wise, we still have volatility in the Middle East, basically. JP Morgan beats earning, but the guidance, the segment they release is actually slightly negative. So it's a little flat. Let's go towards NBC. Right? Yeah. So, okay, right now it's up 5%, right? But the banks still is the dogs of the sectors. Right? If we go down, take a quick look at JPM. It's dragging Goldman Sachs up, as you can see. Morgan Stanley up. We got this big bar, right? It's about 200 days moving average, but I don't see any clear uptrend on this guy. I don't see any trend, and as I was saying, Morgan Stanley is really depressed under 200 days moving average. And Goldman Sachs take a quick look. The major investment bank, yeah, it's still under 200 days. The only one that's above is JP Morgan. So that is no reason to actually initiate any trade on that. Yeah, they're below 200, most of them. So I don't see any bullish trade on those guys yet. You have to go above 200 days moving average before I would even consider. Why is the 200 days moving average so important? Why does everybody, the institution, traders, look at the 200 days moving average? Because that 200 days, 200 trading days is almost like equivalent to a year. So that means if the stock is above 200 days moving average, that is doing better than last year. If it's below 200 days moving average, considering that 200 trading days, around 200 trading days in a year for the market, then if it's below that, that means it's doing worse than a year. So why are you buying a stock that's doing worse? You should buy a stock that is doing better, right? Okay, you buy uptrend, you don't buy downtrend, you don't buy with it. Right? Of course, unless you're like a deep value player, then you buy when they're really cheap. Then that's a good level to buy, and actually you hold it forever. But that's a very different game. That's a Warren Buffett game. That's going to hold for like what, 10, 20, 30 years. You do your valuation, you wait for it to come off, and then you buy, you hold for 10, 15, 20 years. And that is a different strategy. So that's the importance, that's the significance of the 200 days moving average. Oh, I forgot to switch to my charts again, but that's fine because I didn't really talk about much. Again, Google's, it broke a few days ago of this resistance line. However, it came right back. And the day before I was saying if it break, I'm not going to initiate a trade. I want for it to break clean and do a pullback. And I want to see sellers pressing it down, and then buyers comes back in, and then we'll take off. Right? Hopefully in that sense, but now we're just shopping around, making a slight move to the level. I want to see it retesting to this level. I want to see sellers pushing it down and see if any buyers come back in and pick it up on Google's. But again, the bottom market, even the QQQs, we have a triple top resistance right at the triple top resistance. You see this orange line, that's down slope, and a triple top 1, top 2, top 3 is just right at this level right now. Meanwhile, your Spider S&P 500 ETF is even way off at tapping a triple top. If I connect this, right? So this should be here, but it's where it need to pick itself up to at this level to fight for to break this down slope. But it's not. It's still below this down slope. However, it's still up above 200 days moving average. So it's a slight bullish, but not bullish enough. Meanwhile, the diamond, which is DJIA ETF, that had dipped below 200 days moving average and came back, and then now it's just fighting this level. So that's the weakest of the three. Looking at stocks, stocks is the same thing. You have a triple top in that sense. You have this indecision doji star candlestick too. So yeah, that itself is telling me that okay, after this nice uptrend for the year, is taking a temporary pause, taking a breather, and until the stock in this sector this stocks, if it clear this downtrend, then it might pick itself back up, and we can see if we connect the longer term regression channel. Right now, it went below this regression channel, bottom of the regression channel. But however, it didn't even dip all the way to 200 days moving average, the red line, and then it retrace a little. You need to break this for it to be more neutral. Right on the bottom, that will be the bottom of the channel line if you extend this line. So you need to go above this shorter term downtrend, right, for it to go back up with a more significant long-term uptrend. Right? So it's always the bottom market index, QQQ, the sector index, and then the stock itself. Right? Now, why is that? Why is that? Because when you buy QQQ, the money get allocated across all the underlying stock that comprise of the QQQ ETF. So Google is part of that. So money get distributed into Google, or some of it can get distributed directly into the stocks, but the stocks will get distributed back into Google. So both of these contributes to the pricing of Google. So if money comes into the index, it will eventually falls down into Google buying that stock. So that stock will have additional effect besides its own fundamental reason to buy it. Right? Then you have money from into sector index coming in from the QQQ ETF into buying Google's. Right? So you have additional buoyancy, additional demand for it. So it will push it further higher. So that's great. Right now, these two, the sector index and the QQQ, both are still in kind of neutral bearish situation. So people might buy Google but might not buy the indexes. But people buy the indexes will always have to reallocate, those money will get reallocated back down into buying Google in that sense. So you have a secondary effect into it when they buy these indexes when they buy these ETFs. So that's how it actually works. So you have 2 out of 3 the market not getting additional cash flow. Cash when people buying it, you have the sectors not buying only the stock itself is only 1/3 of the picture, right? So you have less effect. That's dramatic. Even if you have very good fundamentals, the reason for it to break out like that. So when the pullback can be as vicious as the breakout, as you can see, it broke and then pop right back. Right? Today is just the market flowing on itself in that sense. So yeah, this market is just still flat. Pretty flat, up 0.5%, and nothing really much going on, U.S. stock open okay, just slightly higher. So, well, J.P. Morgan profit jumped to 35%, so the stock was actually opening flat, and then it came out a little bit. The profit, all these numbers, right, when it post earnings and stuff, is backward looking. It already taking place. Now they're telling you what had happened. What's more important is the guidance and what they see going forward. Right now, the CEO, JP Morgan CEO, is seeing, Jamie Dimon is seeing the volatility in the market, not in the market, in the geopolitics. You have Israeli, Hamas, the Middle East situations. You also have the Ukraine still going on. So that is putting a huge dampening on the global macroeconomic growth in that sense. Matter of fact, he was saying this is kind of like a very volatile time and a lot of uncertainties right now on the geopolitical front. So we're seeing that, and we experience that in the market. But so it's harder for stock to relatively rosy and really make a run right now. That's because of other factors, the macro factors, the economic factors, stuff like that. In that sense, stocks are repair seasons. Okay, oil price surged 4% in Middle East tension rise. Yes, that's kind of expected. I mean, it is sad. War is a very sad situation that I'm hoping eventually the involved party can come to the table and just calm down and because in the end of the day is really the little guys, the civilians who are getting hurt, who are really paying the price in that sense. Yes, it's sad, it's human life and it's precious in that sense. So yeah, well, I mean the oil fund, US oil, $85 barrel, it spiked up a little, but it came off the top of 85. So yeah, so it did experience a nice uptrend and it's coming back down to this breakout level at this point. So if there's a retesting on these level, then we'll see how it works, how it goes. Right now, retest, spike back up. It's going to retest, or the question is, so this is a good support level. Oil right now around this area, around this area, I would say. this, however you want to call it. Resistant, broke, resistant becomes support. But you have this tail, so they spike a little low and then they come back down. It's still below, it's above 200 days moving average, but below the 50 days moving average. So the 50 days, so if you consider 200 days, 50 days, 1/4, that's like a quarter. So for the quarter is below it. But this oil is very different from stock as oil is commodity. So there's a completely different way of valuation, and you don't really compare to how it's doing year over year. You more compare of like its supply and demand and all the geopolitical situations and those different type of factors. Then overall, how is it doing compared to last year? Because it's not a company, or it's not a company, it's a commodity. So yeah, different ways to analyze it and play that. Let's take a quick look at dollar yen also. So it's still staying buoyant. Wow, look at this nice false hammer. I was predicting it's going to make a run for 150. But my prediction is meaningless. It's just prediction projection is meaningless. If it does make a run, then we'll see if it's going to break cleanly and make a pullback, or just people just sell out over there on the dollar yen. But it had a nice run. It broke and then it ran again. Right, so miss this trade. That will be a nice trade actually. You see a nice false hammer right here to spot. Right, it broke and then it hovered here. It tried to break up again, it couldn't. Right, upside down false hammer, and then it come back and then you have a false hammer. That is an entry signal when it break again, or even buy around there. Yeah. So I'm thinking that Google might give me the same picture. It's going to fly around like this level, in and out, right? And there's a spike, and then seller comes in, and then eventually it's going to spike down, and then buyer comes in, and then I will initiate trade. If I see a false hammer again, I'm looking for false hammer on Google right now. I'm looking for that. Yeah, probably the trade that is the stronger out of the Magnificent Seven, what they call on this list, and so that's about it about us this morning. I mean, it might give me, I have to be patient. I'm gonna wait for how Google is gonna do. So it break out, and then if the QQQs, triple Q, and the SOX also break above the downtrend, that was this resistance line, that will be a confident booster for bull trade. Right? That will be a good factor, and a factor that turn positive for bull trade in the individual stock, underlying stock of Google, Apple, Meta, Tesla. And, however, Amazon Netflix is still a little bit under the weather. As you can see, Netflix is really the weakest one today. Is down 1%, while the other guys went down slightly. Google is strong, and Apple. So relative strength-wise, these are the top two candidates to buy. And the one that has displaying weaker behavior, the one you should not buy if you are bullish on the play, in that sense. So you always have to use relative strength. So last thing before I call it the morning, we look at my Hikanashi level 2 charts. Very clean, very clearly. You can see the Nasdaq is having this triple top, and you need to clear this line, and you need to clear this top, and then you need to clear this top. There's multiple level 1, go clear this line. Level 2, clear this top. Level 3, you have 3 levels to really struggle before it's going to take off again, in that sense. Right? But nothing is in the perfect world. Is I want to see it break and then pull back, see false hammer, and then I will buy when I see false hammer, and then it takes off. That will be the perfect world. So it's right there around here. We'll have to watch this closely. It might take a little while to develop, 3-5 days, and see how it trades next week in actuality on the Nasdaq. So that is on my main radar right now. The ETR is still a little high, right? So it's in the midpoint. So that's about it for today on a Friday. We're gonna have to wait. We're gonna have to see next week if there's any play, we have a nice run, and it's going a little sideways, a little pullback, not really dramatic. That's okay. It's a slight pullback, and then I'm waiting for a setup that I see buyer coming in, and buy in that sense, and I think it might happen next week. Looking at this, we might see some breakout and then pull back again, or if it's break cleanly. I have to wait for the big breakout, which is at this level. This will be the major breakout if we break this line over here. That right now, that's the bigger resistance in that sense. So you have to. So if you just rip through these, and then that will be trigger a different play. Yeah. So that's about So as well, Hakashi on Google. That is a nice uptrend, right? You can see that it's trending nicely. However, I still have to mark. I need a pullback. Right? I want to see some red bar coming back in, right? And then when it turn again. Right now it's momentum. Right? The volume is just a little low on this, and the momentum is not there on these stocks. The problem is, so I don't have the market, the border market. I don't have the sector behind it. So I will not play when it crossed the middle line. Right? One of the trigger is that from red, when it crosses back in the middle line, you want to take a trade. But if you have the market and the sector behind your back, you want to take that trade. Otherwise, these are harder. That's the harder to take. It might be just whipsawing around, right? Like this came back, right? So right now, I'm looking for this, but that might change. Things always change. I'm still bullish. I'm just waiting for a nice, good setup. I want to see this. I want to see it do this and do this, and then I'm looking for a break back into this area. In actuality, then if the market helps and everything else helps, I mean, initiate the trade when it crosses back over, or if it break cleanly like this, and then when it go back to close to the middle line of the downtrend channel, that is another setup too. So that's actually on the level 2 trade. There's multiple setup, right? The crossing over of the midline on the downtrend channel, the breakout itself, and the breakout and pullback. Right? There's 3 type of trade, 3 ways to trade. And all of them you can actually add position. It depends on really which one I feel more confident in. And right now, I have the most confidence will be the break and pullback on this, because I did not initiate the trade. When it was here, the Nasdaq index was actually pretty bearish still in that sense. That's why. So this is why when it's here now, the Nasdaq is finally touching a triple top in that sense. So if this is touching, there we go, touching a triple top. So therefore, when Google make this crossover into the downtrend channel, the midline of downtrend channel, Nasdaq is way below. It's around here also, around here. So you can project back relative strength wise is that no, even I'm not going to enter the trade yet because the other factors, border market is not giving me the additional tailwind to help push the stock really takes off in that sense. Had it the other way around, yes, if this is up, it broke cleanly, the Nasdaq is up over here while Google break, yes, then I have 2 of 3, and then the stocks also. So QQQ, stocks, and all the underlying stock inside this index is really have a very high correlation to it. And then no matter how you look at it, you want all of them to line up, then you can take a really, if you break out trade, outright break out on these with the market and sector behind it, take the trade. Right now, the sector is not really behind it, the market is not really behind it, just Google itself decided to break out. So that's a harder conviction to open the trade, a bullish trade on that. This is why I was hesitant on Wednesday. I said when it break out, I will not take the trade yet. In that sense, so you always have to have consider other factors behind, not just the stock alone. Right? And technical analysis give you a very clean and quick analysis of the interdependency, the correlation between the broader market index, the sector, and the underlying stock. Right? Yeah. So by itself, it's not enough for me to open the bullish trade. If I have 2 out of 3, then that's another better probability of it breaks cleanly, and it'll be harder for a chance to pull back. And you have all 3 lining up, yeah, take the breakout trade then. If it break on the second bar, make a new high, yeah, that's the rules, right? Let the breakout bar complete, and then on the following bar, when it break a new high, enter the trade. That prevent a lot of time what we call a false breakout. Right? It breaks out, and then at the end of the day, it pulls right back again. Right? That's a false breakout. So you have to wait for that bar to complete. First a clean breakout, and then next day you wait for the new high against yesterday's bar. Then we will take the trade. But in this sense, it did not happen on Google. Right? On Google, if we go back on Google, right, it broke. After I was saying that what I would do, it broke this, right? But then it make new high and come right back. Here's the thing, it came right back, right? So you're like, oh my God, did I take the trade? Did I not take the trade? So let's go inside further. Let's go look at the hourly of these few days. You can still see clearly all the important level it broke. Right? This is 1 hour. Wow, you have upside down false hammer. That's not good. Eventually, that is still, that's, it broke on Wednesday. Thursday made new high, and then came back. And then you have this, and that's just a good indication. But nah, it's a false hammer on the 1 hour. So that will be trigger. You trade on 1 hour definitely. That trigger the trade in actuality. Yeah, this bar will trigger a trade, and then you will hold it. So it's a good level to actually enter this trade if you trade the hourly. But I don't trade the hourly again. I trade the day, right? So we pull back out to the time frame. Yeah. So again, all right, broke. All right, this is the high. All right, on this bar, right? As it complete, it did not broke. It broke and got pushed right back down on this bar. So if you go inside the alley to trigger trade, no, there's no trade. You should not have triggered a trade. Right? So we can even go in the finer detail. 15 minutes. Right? 15 minutes. No, there's no green bar. No single green bar above this, close above this high. Yeah, so even the 15 minute will not trigger a trade. Right? But I'm trading daily. I will use a lower time frame to watch to see how it's reacting. Right? Ideally, if it's to use the 1 hour, since that's 8 buy in a day. Okay, 8 buy in more than enough to tell you the picture. Right? 4 hours is too little because that will be only 2 bars. Right? At least then I will use the 1 hour to see the intraday, to watch the intraday, and then I'll compress down to half hour, 15 minutes, just to read the market of the day, what is really doing, the player within that time frame, inside that day, what are the players really doing, and then I pull back out. I will pull back out to the daily bar again, and that already, the intraday already tell me no, there's no trade, and I can see clearly, oh yes, even the daily bar tell me so. Right now it's coming in. It's coming pretty hard actually. Look, it's testing this level. So we can again go back into the 15 minutes. We can see. You can see. Yeah, it just pull back and it's fighting at this level. I don't see any false hammer. The thing is on the 15 minute. Okay, but I mainly would use 15 in 1 hour. And I see false hammer on this, so that would have triggered trade if I'm using the 1 hour for the entry of a daily. But in actuality, I want to see end of the day in actuality, and I want to see a daily false hammer. I don't want to see just an intraday time frame. That tell me this time frame, yeah, this bias comes in, but only during this 1 hour, and then the rest is just struggling. Right? But it give me a heads up. When you compress down to a lower time frame, it gives you a heads up and potentially a setup. Right? But at the end of the day, I'm using, again, still using the daily bar as my trigger and There's no false hammer on the daily. Matter of fact, it's a long tail the other way around. Right? Today is not an entry day. So if I'm trading the daily bar, use the daily bar as my main trigger. I can compress down, look at what's happening intraday, give me a better understanding of the intraday. But at the end of the day, I have to wait for the bar to complete to give me a better picture. I could elect to open the trade at the right before the market close. If everything is displayed a false hammer, right, a long tail at the end of the day. Right, the last 5 minutes, the last 10 minutes, so probably why chances are it's not going to make a dramatic changes of the day. And if that's a false hammer formation, then you can enter at the end of the day. Right? But you wait for the last 5 minutes, wait for the last 10 minutes. I would wait for the last 5 minutes before I enter that trade, even if I'm seeing the formation where it is taking place. So, for example, right here, I do this and then come back up. Right? So that's a false hammer. So there's two ways I can enter the trade. I can enter the trade 5 minutes before the close and I capture this false hammer. Or I can enter the trade the next day when we break new high. Right? And which one is better? That's no better. It's just what you're more comfortable with. Do you want to take a position early, or you want a more good confirmation that it make new high after the false hammer? Right? That's personal preference. And what I do is, if the bottom market is behind me, is the sector is behind me, everything's rosy, right? Everything is look good, yeah, I will take the trade earlier. If things are more uncertainties right now, I will wait in that sense. Like right now, if I do a false hammer, I will still wait. I will still wait for the trigger that it make new high. In the next bar of the false hammer, then it will be the trigger. So sometimes you get these different trigger points, different setup, and you got to think about which one is more suitable. So that is the art side on trading is art and science. Right? The science is analyzing data, looking for repeatable process. Right? But the art is when do you actually trigger the trade and when to get out. So that's the art part. That's from experience. It's still a repeatable process because I want everything to line up before I take a trade. Right? And more things lined up, the better probability things will go for the trade. In the sense that right now, the bottom market and the indexes of the stock is still not in a very bullish way. So I become more careful, more prudent. Is that I will wait for false hammer, and then I will wait for the next bar when it make a new high of the false hammer. Then I open the trade in that sense, and that will be more prudent because it tells me that okay, they're making new high now. Okay, instead of a false hammer, if the following day when break lower, then there's no reason because even there's a false hammer, it's still pretty bearish in that sense. I want it to be bullish, right? And then I want to see it to take off like this. Then that's the perfect scenario, and that's how it works in that sense. Okay, that's about it for today, and I don't see any trade yet specifically for the setup I'm looking for. I want to take a more high probability trade right now until the market tell me otherwise that I can take a little bit more risk. Right now, I need to be more prudent, a little bit more patient. There's more uncertainties in the market, so I have to wait. And that's big part of this game is to wait for everything to line up correctly and then take the trade. You cannot force a trade. There's no need to force a trade. You force a trade, chances are you're not taking good setup, and your probability of winning and making money become less and less. Okay, that's it for today. This morning the market is still just sideways right now. Yeah, not even up 1%, up slightly. So we'll see. I'll check the market later on afternoon and see how it goes, and then at the end of the day and do a review of the weekend and prepare for next week. Yep. Okay, thanks for watching, and I'll post more additional video as soon as I have more good situation that developed and took place. Thanks for watching. Have a good weekend.